Hello and welcome to Hot Money Technicals on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I'm Darshan Mehta. Let's welcome our experts then, Raja Venkatraman of Chart Advice, along with Brijesh, Bhatia of Dealmoney Securities, and Amit Shah of Indiabulls Ventures join me on the show. Many thanks to all of my guests for joining me. Before we start with the show with our analysts, let's bring in Yash Upadhyay, who has a chart on Marico this time around. Good afternoon, Yash. What does the chart indicate?
It's a positive call on Marico, Darshan. So, in a scenario like this, because of the overall consumption slowdown, we've seen most of these FMCG names come off quite rapidly. We've seen underperformance coming from the likes of HUL, ITC being one of them, and Marico too has been one of the laggards in the FMCG pack. The stock has been correcting, and it has come down from the levels in excess of almost 400, and it has stayed in that band for quite a long time, not moving substantially in any direction. Even the corrections haven't been that great, but it has come down to levels where it is currently looking very attractive from technical point of view, and with the correction from the mark of almost 400 to as low as 320, the stock has now come down to a very crucial support zone on the weekly time frame, and this is how the chart looks like on the weekly time frame. There has been buying coming in as well over the last 2 weeks. We've seen volumes also pick up substantially, and we've seen the stock rebound from that support level to move higher, as well as the fact that the RSI too has given a positive divergence. So we've seen the RSI come down to the levels of as low as 30, and then it has managed to move up as well. It is still below the mark of 40, wherein we still need to get certain amount of confirmation that it has taken out that level. But currently it looks like the bottom has been found when it comes to Marico, and from current level we could see the stock move up from here.
Okay, that's the view that's coming in on Marico this time. Thanks so much for that, Yash. What's your sense on this, Raja? Marico, what should one do?
Yeah, in the month of, over the last few months, actually, it has faced some steady selling pressure. Now, in the region of around 300 to 320, the stock is trying to bottom out. And there is a strong display of some bullish revival seen based on the candlestick setup as well. So I would be advocating a similar buy opportunity in Marico at current levels around 340 with a stop loss below 320 for an upside towards 400.
400. Okay, what's your sense, Brijesh?
Yeah, definitely a good reversal bet, as he has clearly pointed. Stock is taking support at 200 weekly average. Plus, if you look at the short-term charts, it's been breaking out of its rectangle formation on the short-term chart. So I think purely from a momentum, I would look for targets around 362 on the upside.
Okay, and what's your sense, Amit?
Yeah, I mean, stock is giving initial signs of some bottoming, a small bottoming formation. So I'll keep a stop below 327, but I'll buy only once it convincingly closes about 342. That is where I'll take a trade. Right,
okay, so I think it's a consensus bullish call that's coming in on Marico, and one stock that you need to watch out for. Let's begin with the first round of chart. Raja has the first chart, and he has one on Phoenix Mill, no doubt one of the best performing real estate stocks as of now, trading close to record highs. What makes you bullish on the counter?
So what I've used today is the Ichimoku setup. And based on the Ichimoku setup, you can see here that the price had undergone a major consolidation over the last 6 months. And now what we are seeing is that the stock has steadily tried to get out of this consolidation. And what you can see here is a strong bullish trend to the upside and a steady higher low being formed, which is a signal of some bullish intention being in play. And now if you take a look at the momentum indicator on the downside, you can see here the RSI was trying to cross above 60 but was not successful. So crossing above 60 is a signal of some bullish play in progress. And what has happened here is the price has not only crossed 60, it has now crossed even the 70 levels, which indicates a strong bullish potential in play. Now if you combine the price action with the momentum, so let's take a look at the price action once again. What you are seeing here is based on the Ichimoku setup. This is called as a leading indicator, which says that the trend is now indicating some strong move to the upside. And you can see here that it had already flashed up by somewhere in the month of September, but now the action began somewhere towards the end of October, and you can see a steady higher move to the upside and long bullish candle formation actually projected it to be a buy candidate for today.
Okay, buy candidate. What's the ideal strategy one should form? It's at 835 right now.
Yeah, at the time of recommendation, it was already around 800 based on yesterday's closing. So one could trade at current levels, use declines towards 770 levels to buy into. Place a stop loss below 750 for an upside towards 880 and 925.
925. And this will be the moves for the past few days have been strong. You think this would be a fast mover?
It won't be a fast mover, but yes, you can take it as a positional play.
Okay, thanks so much for that, Brijesh. Phoenix Mills, would you be bullish?
Yeah, the chart is very much a very bullish chart. I'm expecting a stock to rally towards 935, 940 levels. But before that, I think there could be a slight dip towards 785, where that could be a good accumulation level for me. So I would buy on a dips toward 820, 785 zone, and then look for 935, 940 on the upside.
Okay, positional call coming in again. And Amit, what's your sense?
Yeah, I mean, everything is right for the stock, from all time frames. If you see, the stock has done excellently well. The 730 breakout range has been, cleared quite meaningfully. So yeah, I mean, similar targets, 930 to 950 range on the upside is what I'm eyeing for. So I would, since it's a strong stock, I would apply a strategy of buying half right now so that I don't miss on the up move. Sometimes you don't get in move on the downside. So I would buy partially right now and look for some dips towards 790 to 800 to accumulate further. I'll keep a stop below 750 and ride it for that 930, 950 range.
Okay, so it's a consensus bullish call that's coming in on Phoenix Mills. Next up is Brijesh with this chart. Actually wants to give a chart of view on the index itself, and that's the Nifty Bank. The Nifty Bank's rather strong after a big drop that we saw yesterday because of expiry. Today it's up almost 350 points. What's your sense? What should one do?
So this is the weekly chart. So let's start with the weekly first. Just look at the three lines. These are the Bollinger Bands. Okay, and generally these are the 20 days average, the white line, and I'm taking 2% deviation, so which is the Bollinger Band. And if I just look at the 2% deviation, every time stocks tends to test upper level of the band, stock tends to fall. So similarly, we have seen here stock index trending towards the upper band of the resistance. Now, if I just look at from the left side, okay, every time stock is tested at the higher upper level of the band, and we have seen negative divergence in the RSI. Stock has seen a dip of around 14 to 15, 13 to 14%. Okay, this is the first time we have seen since 2018, in the last 2 years or 24 months. Similar structure means RSI has formed a negative divergence. Stock index has tend to fall around 14%. Similarly, we have seen here index testing the upper band of the Bollinger Band, index falling around 14.5%. Similarly, here index tried to test over here. We have seen RSI negative divergence, and this is the fourth time in last 24 months we have seen that prices have breached the new highs. But if you look at the RSI, it is clearly on the negative divergence. Plus, now if I look at the index, it has tested the upper band, showing sign of fatigueness in the today's momentum. Though it is up, I would take a short opportunity at current point of time also. Now, if I just look at the daily charts. Yeah. So now look at the daily chart. This is the purple line.
I just want to clarify. Yeah. I think it's a short call, right? So
yeah,
I think
it is a short call.
Just viewers don't. A graphic says I add on rise. So I think it's a short call that is there on the Bank Nifty. I just wanted to clarify that. Yeah. So don't look at that graphic. Just listen to what Brijesh is saying.
Yeah. So if I just look at this average now, the purple line is 200 days daily average. Every time index has deviated 10 to 12% from 200 days average, index has taken a hit. This is the first time. Now, if you look at index has rallied 13%. There is a correction. Similarly, it has deviated 12%. Now, if I just look at the recent momentum, it has clearly deviated nearly 10.5, 11%, and it is again resisting. Now, if I just look at the yellow rising trend line, it is taking multiple resistance around these and taking a dip. Now, if I just look at the lower time frame than this, the 4 hours chart. Yeah. So, if you look at this 4 hours chart, it has formed a bearish harmonic pattern called bearish butterfly. Now, if I look at the similar structure weekly, daily, and the 4 hour chart, we are clearly witnessing negative divergence yet again. So I think this is I am expecting around 4-5% fall on the Bank Nifty, and at around 32,500 in January futures, one can take a short bet, keeping a stop loss of 33,100 and look for around 30,000 to 29,500.
Okay, so that's a sharp fall that's coming in. Thanks so much for that, Brijesh. Comprehensive explanation. Amit, you agree? Are you looking at a negative view on the Bank Nifty?
Yes, to some extent, because even at Indiabulls, 32,500 is what we have been mentioning as a good stiff resistance zone. So, but of course, we don't expect a big steep fall for the Bank Nifty. Somewhere around 31,800 is the first zone that we eye for on the downside. Beyond that, we'll reevaluate, the phase of correction. But to me, it just appears a small correction within an overall uptrend. So we are just playing for the small downside. In an overall uptrend.
Okay, and what's your sense on this, Raja?
Yeah, on the weekly charts, Bank Nifty is forming a doji, which is uncertainty. So while Brijesh is cautioning and projecting a short candidate on the Bank Nifty, I would actually use the dips to buy into, and the levels would be somewhere in the region of 32,000, where I find a strong set of supports emerging.
Okay.
And at those levels, one could actually initiate some long opportunity, because the prospects of Bank Nifty still continues to be bullish, and overall sentiment, actually Bank Nifty is leading the markets higher. So I would be a buyer in Bank Nifty, and the levels would be on a dip towards 32,000.
Okay, that's the view that's coming in. Diverging views coming in. Two of our guests do believe that there could be profit booking that's coming, but Raja's strategy is buy on declines on the Nifty Bank. We have the third chart from Amit, and it's a chart on Sharda Energy and Minerals. Let's pull up the chart. I think some of the pellet plays have done well. It was Godavari Power just done well. Sharda, I also believe, has pellet play, and pellet prices have moved up significantly. So that's the fundamental part of it. But on the technical side, what are you spotting? It's a long, right, or it's a short?
It's a long.
It's a long, yes.
Yeah. So I mean, it's name is energy, but it's a metal stock. What we are looking out here is, you know, a nice breakout, just an initial breakout about the falling trend line. Now this is happening with the entire sector. The Nifty Metal Index is doing well. Most of metal stocks, even the large caps, are now trading above their 200 EMA consistently. You know, there is a good sectoral tailwind going on for the sector. Mid caps again have started doing well. So, you know, there's a good tailwind, I believe, for this mid cap metal stock. Since the metal index itself is doing very well, and I expect anyway, I've been bullish on metal space for quite some time now. I believe there is a decent money making opportunity as far as you know, Sharda Energy is concerned. It's trading now above its 200 EMA on the daily charts. Also, if we see, the volumes have been encouraging on up days, you know. So yeah.
The volumes.
Yeah, volumes, yes. So on up days, you know, the volumes have also been quite encouraging. The space is doing well. So I believe there's a good money making opportunity here. I was use small dips towards 190 and partially even I'll look to buy even at current market prices. I'll keep a stop below 190. My first target for this one is 234, but overall I do expect the stock to head towards 260. Metal space can surprise, the entire metal space can surprise big time on the upside.
Okay, so this is a positional call, so you can buy it in declines also.
Yes.
That's the strategy.
Correct.
Okay, thanks so much for that, Amit. Brijesh, Sharda Energy, if you track it?
Yeah, if I just look at the stock is since 2018, I would mid 2018 stock, I haven't breached its 200-day average. I would slightly wait for 215, 216 to take a cross. Then I would look at target of around 270 on the upside.
Okay, and Raja, what's your sense?
Yeah, the chart has currently overall structure on the weekly chart does appear to be bullish, but then right now it has traded into a strong resistance zone around 210 to 220, you can say. And I find that a strong median line resistance is actually preventing the stock from rising higher. That's why you will see over the last 4 days, its attempt to move higher has been negated. So I believe that there could be some profit booking emerging at current levels, and one should actually be looking to buy on dips towards the 185 to 190 region. Stock overall setup remains bullish, but yes, it's a buy on declines toward these levels.
Okay, that's the view that's coming in. So that's the end of the first round. The second round begins with a chart by Raja on Deepak Nitrite. Deepak Nitrite trading at a fresh 52-week high. The phenol play coming into play, and it's doing really well for itself. Let's have the chart and let's see what recommendation that Raja can give it at almost 380. From 250, it's managed to rally all the way to 380 almost. What's your sense? What should one do?
So if you again take a look at the stock, ever since 2018, the stock had been in a nice consolidation. And what has been a prominent feature in the stock is continuous rounding pattern, which is a signal of steady bullishness being maintained. And now what has happened is, as it moved higher, there were this bullishness which continued to extend. And here also the prices are making a higher base, which is a signaling of steady buying interest coming in at every possible decline. So this decline which emerged, and over the last almost the year, the stock has been moving in this channel formation. I have used a tool called as Pitchfork, which is based on the median line. And you can see here the median line has resisted the prices. It's on the price channel. So it has continued to resist, and even over the last few weeks, it has been resisting it. But then today, we are finding that a strong closing, which is emerging above the median line, suggests that there could be some potential move to the upside. And that's why this was chosen as a buy opportunity.
This is a weekly chart, right?
Yeah, this is a weekly chart. And you can see here, even on the lower panel, I have used the ADX DMI as the momentum indicator. And based on this momentum indicator, we find that the green line, which is the positive DI line, which is actually inching higher, which suggests that there is a strong bullish play in progress. And again, combination of price and momentum projects strong price action in the coming days.
Okay, so it's at 380 currently. What's the ideal strategy?
Yeah, one could look to buy at current levels, use dips towards say 350 as a buying opportunity, place a stop loss below 325 for an upside towards 440.
Okay, thanks so much for that, Raja. What's your sense, Brijesh, on Deepak Nitrite?
I will go with Raja because the chart structure is very strong, and if you look at the structure of the rally, stock generally rallies, consolidate and rallies. So that's the strong bullish trend the stock is. I'm expecting 480 on the upside, and stop loss for me would be around 345.
Okay, so 100 rupee upside is something that you see. Would you also see some this bullish trend on Deepak Nitrite?
Yes, of course. I mean, I think no analyst can actually get bearish on this stock. You know, everything is going great for this one. In the near term, from a trading perspective, I'll keep a stop below 350 and look to play towards 425 in the near term for an upside target.
Okay, that's the view that's coming in on Deepak Nitrite. The next stock that is there is Brijesh's stock. Let's have the chart. It's a chart on NMDC this time around. NMDC, no doubt, a lot of positive trends have happened. It's rallied all the way from 100 to 120. They've gotten the mines, they've gotten the connection for the steel plant. But that's the fundamental trend. Why are you bullish on it on the charts?
So let's start with the first, where stock has seen a good downside from the higher levels. Okay, and if I just look at the start of the first half of the 2018, stock was in the bearish trend. And if you look at the volumes, it was clearly a selling pressure distribution was happening. Now, if I just look at these ways, where stock was consolidating, look at the slow and steady accumulation happening. Okay, whenever there was every dip, the slow and steady accumulation was happening. When stock at initial level, when stock fell, the volumes were dry down. So it was consolidating majorly nearly 1 year in a narrow range. We had seen a sharp fall right from around 120 way back to around 80 levels. Now look at the V-shaped recovery the stock had, and look at the volumes it has seen in the recent momentum plays. So generally, if you look at the Wyckoff theory indicates that when the stock is trending in a narrow range, there is a breakdown on the downside, and when there is a V-shaped recovery, generally it is known as the spring, or I would say the shakeout, where the bears were been initiating. So this V-shaped recovery with the stronger volumes indicate that the stock has seen a major bottom. Now if I just look at the recent momentum over here, even after a small dip, stock is showing a very strong sign of bullish momentum. Now if you look at the volumes over here, it is clearly indicating still accumulation is going at the higher level, about 100 levels as well. So I think at 126 one can add to around 120 to 120 on every dips. I'm expecting target of around 154 to 160. Now if I just look at the weekly chart of this as well. Yeah, so this is the weekly chart. No, this is
Oh, I don't think that's made, but let's get back that chart.
Yeah.
No. I don't think that is made. I think there's some. You'll have to continue with this chart. Sorry.
Yeah. So if I just look at the weekly chart also, since 2018, this is the first time that the stock has moved about its 200 days weekly average. Plus, if I just look at the volumes at the lower levels, about 200 days weekly average, it's consistently a higher volumes for around 40 weeks. So that's clearly indicated slow and steady accumulation is going in the stock. Now with the price breaking about 120, still volume addition is there. So this is clear cut a good long bet from around 4 to 6 months point of view.
Okay, thanks so much for that bullish call on NMDC coming in. Raja, would you be bullish on NMDC?
Yeah, definitely the overall structure is quite bullish. It has crossed its September 2018 high, and if you actually put a Bollinger Band on a weekly chart, it's actually continuing to expand even at this level. So which is clearly suggesting that there is strong bullish momentum on the onside. It's tagging the upper band, which is a clear signal of bullish momentum in play, and the momentum indicators do not show any signs of tiring out. So all this put together clearly suggests that we could expect more upside towards the 150 levels.
Amit, is that something that you would also agree?
Yeah, you know, we're very bullish on this one, you know, because on the long-term charts, if you see the entire decline which has been happening since, 2010, is coming to an end. At around 75 levels, there is a strong double bottom formation. Stock has, displayed a V-shaped recovery after that very sharp fall, which shows the aggressiveness of the buyers. Also, it has made a bullish inverted head and shoulder pattern. So, in the near term, 150, 155 is the minimum that I expect in this move. I'll keep a stop below 107 and also look to buy on declines towards 115.
Okay, that's the view that's coming in on NMDC, and the last chart, at least from our guest before Yash comes back in, is a chart on Manappuram Finance. Both Muthoot as well as Manappuram are two stocks which have done extremely well in the last few days at least. So let's pull up Manappuram Finance. Why are you bullish on the counter?
Yeah, I mean, it's a very simple strategy. It's been, in a continuous uptrend. Overall, if you see from here, lower, higher tops, higher bottoms, higher tops, higher bottoms, higher tops, higher bottoms. Now, this also phase was quite an aggressive phase. Post that, what we have seen is a very tight consolidation, which tells you the confidence of the buyers. Stock did not retrace much of its previous rally, so this is more of a flat pattern breakout. Again, this up move, if you see here, a very tight consolidation, which again tells you how confident the buyers are. Again, a breakout, so it's a classical textbook, higher tops, higher bottoms, and the continuation of trend. So it's a no-brainer, and it's into fresh all-time highs, and it's a clear-cut buy. I would look to buy at current market price. I'll keep a stop below 161. The first target that I'm looking for is 208, and the second one is 224 for Manappuram.
Okay, so that's quite aggressive. That is there. Thanks so much for that, Brijesh. Manappuram, are you bullish?
Yeah, very much bullish. So if I just compare this Manappuram with gold chart, so if I just look at the Manappuram stock since 2015 to 2017, where gold prices were slightly flat to negative, stock was consolidating. We have seen a good momentum since 2015-16 in the Manappuram, where gold prices have slow and steady formed the bottom and slow and steady rallying. Now, if you look at the recent momentum since start of 2019, gold has seen a good upside, and Manappuram has with the gold prices have seen a good upside. Now gold moving above $1,500. I'm expecting gold prices to move towards $1,600 and Manappuram to back to 210, 215.
Okay, that's the view that's coming in. Raja, what's your sense?
Yeah, like Brijesh rightly pointed out, Manappuram has been moving in relation with gold, and the gold also doing well. And the overall chart structure of Manappuram clearly indicates that there could be some potential strong continued progress to the upside, and you could expect the targets around 200 to 210 in the next few weeks.
Okay, that's the view that's coming in. Positive view coming in on Manappuram Finance. Yash is back with the second chart this time around, and it's on Exide. Exide has been a massive underperformer compared to Amara Raja. It's down almost 20-25% this year itself. What's your sense? What are you looking on the charts here?
Another reversal bet, actually, Darshan. We spoke about Marico from the FMCG pack, and now we've slowly and steadily seen most of these auto companies also do fairly well. We've seen Maruti again back to levels in excess of 7,000 from its bottom of close to around 5,500 in the month of September, and consequently we've seen some of the auto ancillary names also see buying interest come in. We've seen the likes of Minda Industries as well as Endurance Technology and some of the other smaller auto ancillary names steadily rising in trade and are hitting fresh multi-month highs, and that's the same thing that we expect as far as the technical setup is concerned for Exide. It has come down to levels where it has historically found support. So around the mark of 180 to 178, every time it has come to these levels, we've seen a sharp bounce again back to the levels of almost 200. So it is a trading bet, and at the current level, the risk to reward ratio is also extremely favorable. Take a look at how the RSI has also moved in conjunction to the price. So while the price has been in a narrow band and has consolidated around the mark of 180 to 200, we've seen the RSI make higher highs on the weekly time frame. So that is another indication of the underlying strength. So at the current level, at the mark of around 184, one could look to add the counter with a strict stop loss below 180 with a target on the upside closer to around 200.
Okay, 184. Exide, thanks so much for that, Yash. Exide, what should one do?
Yeah, Yash is correct in the sense that the momentum is picking up, but then unless and until it crosses 194, you would not see any momentum on this counter. So I would wait and watch for Exide to move above 194 before I take a call on the buy side. But yes, the view is definitely on the buy side.
Okay, what's your sense?
I have a contra view to Yash because if you look at the momentum, it's clearly in a downtrend. So I would take this rise around 187, 190 as a short opportunity with a stop loss of 205, and I'm expecting back to around 154 levels on the downside.
Okay, and what's your sense, Amit?
Yeah, I mean, see, it's been in a downtrend. Today, of course, it's up with good volumes. Recently, we have seen some other, ancillaries also doing well. But, at best, what it's been doing is the downtrend has been now in a sideways trend. So, only if it closes above convincingly above 198, 200 kind of a zone is when I would see larger moves coming in for the stock. Right now, it's just sideways, and I would avoid it right now.
Okay, that's the view that's coming in on Exide. But with that, it's a wrap on today's edition of Hot Money. Let me thank my guests who've come in today, Raja, Brijesh, as well as Amit. Thank you so much for coming in today. Ask BQ comes up next. Stay tuned to BloombergQuint.